using a lot of illustration coming in, especially from the political arena. In other words, we'll be making reference to NPP, NDC, whatever the heck, and all these. So for those of you who wear your party colors and your party dresses everywhere, please make sure you put that aside. We're not going to do politics in my class. There's no politics here, but we're going to be using our knowledge, our concepts, using some practical examples to ensure that we really understand what we are doing pretty well. So please take note of that as we begin our discussion. We're going to be using a lot of illustration from the political sphere, but that is not, that doesn't mean that we are going to be doing politics in the class. So just take note of that. And I'm saying this because I know some of you wear your political dresses and coming in, so you want to make sure that that doesn't affect the way you interpret what we're going to be doing at the end of the day. Okay, so let me see some people coming up. Got it. Spotlights. George Phyllis. Today being the first day, I'm going to just take time to confirm people and bringing them up. So let's see. All right, so let me share my screen and then let's begin the discussion real quick. No money. Okay. All right, so my screen is up now. I believe you can see my screen. Okay, so public sector accounting and finance. Like I said, we're gonna go through a number of things, the syllabus and the exam structure, learning strategies and techniques that you must adopt. Then we're gonna start with the introduction to public sector accounting and finance today as we begin the journey for our discussion there. I don't know, some people are joining my meeting that I don't even know why they are joining. Okay. All right, so let's go. For those of you joining us on YouTube, this is our exclusive session for our classes relating to the August 2022 examination. And we decided to stream today's lecture just to give you an overview on how our full lectures are. So if you want to enroll in our full courses, you can head on to our website and enroll to join the full classes as we continue with our discussion. Okay, so let's go. Now, public sector accounting and finance, it's an interesting subject, very easy to pass, but a little bit technical as well if you are lazy, like in Nhyira Premium. But I hope that none of you on the call is lazy, and so you're going to do whatever it is that you have to do in order to pass the examination. So let's share our thoughts quickly on the syllabus structure and then the examination and the key issues that we need to focus on. Now, to increase our chances to pass the public sector accounting and finance examination, we must understand the structure of the exams. Now, whether this is your first time or you've written the exam before, you've sat for the ICAG exams before, we're going to be having 5 compulsory questions that we're going to be answering. And it's compulsory, so you're supposed to answer all of them or attempt all of them. These 5 questions are going to be coming from almost all aspects of the syllabus. In other words, the examiner, will try as much as possible to cover as many as he can within the exams to increase the chances of widening the scope of what has to be covered. So we will have 5 compulsory questions. The question we ask ourselves is, what are the key issues that we have to focus on so that these 5 questions that the examiner will bring, we can increase our chances of passing the exams? What are the key issues that we need to focus on? That is what we want to start with today. So number 1, fundamentally, the examiner is going to be setting some questions on us relating to issues that comes with the final accounts. So number 1, financial statement preparation. There is a 20-mark question done deal waiting for us in the exam hall on the preparation of financial statements. That's the 20 marks. Now, when it comes to the preparation of the financial statements, at this level, we're going to be having either on the consolidated fund, that is the central government. We're going to get into this in a moment, don't worry. On the consolidated fund, or on a local government, that is either a metropolitan, municipal, or district assembly, that the examiner could share some thoughts and bring us some questions on in that case, or other covered entities. Now, we will get into some of these later on, so don't worry. But for the purpose of understanding, when we say a covered entity is simply an entity whose activity or operations are financed either in whole or in part by the government. So any entity at all whose activities or operations are financed either in whole or in part by the government or from the consolidated fund is referred to as what? A covered entity. So what are we saying? We're going to have a 20-mark question done deal waiting for us in the exam hall relating to financial statement preparation. And that can be either on the consolidated fund, that is the central government, or the local assembly, that is a metropolitan, municipal, or district assembly, or any other covered entity, that is any entity whose activities are financed either in whole or in part by the government or from the consolidated fund. So the examiner can ask us to prepare final accounts of a government hospital, final accounts of a school, okay, or any other agency of government or authority of government, as far as the activities are financed either in part or in whole by government. These entities' financial statement would have to be prepared. So that is a key done deal area that we have to focus on and be on the lookout for, because definitely the examiner is going to be throwing something at us, and we should be in the position to be able to answer the question. But what we need to ask ourselves is, Nhyira, how do we ensure that we will be able to get the maximum marks from this? To be able to get a maximum marks from this, there are 2 key things that I want you to pay attention to, and that is one of the key topics we'll be looking at later on, and that is revenue management and expenditure control. Revenue management and expenditure control. When we do this topic, you're going to know the various sources of revenue to the government. Then you're going to also know the various government expenditures for the central government, for the local government, for other covered entities. We're going to be covering all of these things in that case, and we'll get there later on as we continue with our discussion. So this is a key topic you don't want to take for granted, because when we get there, maybe the examiner may not bring a dedicated question on revenue management and expenditure control, but the knowledge from revenue management and expenditure control will enable us in order for us to be able to prepare the final accounts. Then the second thing that we need to be mindful of will be the issue relating to the IPSAS, International Public Sector Accounting Standards, the IPSAS. Because note that the Ghana government adopted the IPSAS in 2014, and it is in the implementation, and it is hoped that by 2023, that is by next year, the implementation will be done so that from next year, government will now be using all government entities will be using the full accrual basis of accounting. All right. So that is the hope. I don't know because of the COVID, if really they will push through or it has been totally implemented, but that is the idea. Now, so the IPSAs are also critical for us to be able to increase our chances of preparing the financial statement and getting maximum marks at the end of the day. To be specific, a number of IPSAs we have to be aware of include the following. That is IPSAS 5, borrowing cost. IPSAS 9, revenue from exchange transaction. Revenue from exchange transactions. And then IPSAS 23, revenue from non-exchange transaction. And we'll go through all these things later on, don't worry. Then we have IPSAS 12, inventory. Then we'll have IPSAS 17, property, plant, and equipment. So these are fundamental IPSAS that you must know about as we prepare ourselves for the financial statements preparation. Now, let me say that for the purpose of the time availability and the things that we need to cover, we will not be able to go through all the IPSAS. However, on the online study portal, you will see that we have covered all the IPSAS on the portal. So I will entreat you that you start watching some of the IPSAS and some of the other topics that I'm going to be telling you about later on. So we will not be able to cover all the IPSAS in class, but they are all available on the portal that you can watch in that case. But before you enter the public sector accounting and finance examination, you have to ensure that at least these IPSAS, you know about them. IPSAS 5, borrowing cost. IPSAS 9, revenue from exchange transaction. IPSAS 23, revenue from non-exchange. IPSAS 12, inventories. And IPSAS 17, property, plant, and equipment. So that is a huge aspect of the syllabus that we have to focus on, because definitely, the examiner is going to be throwing some questions at us, and we need to be able to answer that question and get the maximum marks at the end of the day. Now, some of you are joining as well on Zoom. If there are any questions you have, please raise your hand and I'll bring you up, or you can put it in the chat for me and I'll take your questions as well and answer any questions that you're having. For those joining us on YouTube, you can also put your questions in the chat for me and I will answer them for you as we continue. And please, in case you smell that I am rushing, raise your hand and notify me so that I can slow down, because maybe I'm highly spiritual this evening. So I wouldn't know if I'm rushing. So if you feel I'm rushing, you please call me to order, okay? So that you don't get missing and say, oh, Nhyira is rapping throughout. Okay, so that's the first key aspect, financial statement preparation. Please, we're going to focus on this very well. All right. Number 2. The second thing that we need to understand is about performance measurements or performance evaluation. There is going to be a question in the exam hall on how we can assess government's performance for a given year under review. Either the central government, a local assembly, or a covered entity. So it's about ratio analysis. Now, there are 3 things that we're going to be looking out for here. We have what we call the common size analysis. We're going to explain all these later on, don't worry. We have what we call ratio analysis. And then we have what we call the budget variance analysis. The budget variance analysis. These are the 3 key things that we are going to be looking out for when it comes to performance measurement. But most importantly, common size analysis is not a big deal like that. But the ratio analysis is a huge deal. We're going to be calculating various ratios and interpret various ratios, like the debt to GDP. Currently, the debt to GDP of Ghana is 81.3%. I mean, Ghana is really highly geared at the end of the day. But also, we're going to be looking at the budget variance analysis. This is where we're going to be using the public expenditure and financial accountability framework. That is PEFA or PIFA. That is also one of the key topics we will be looking out for. Okay, so to help us to use the budget variance analysis, comparing government's budget to the actual performance, we're going to be applying or using the PIFA, one of the key tools that the examiner will be bringing as well in the exam hall. So that is a second huge aspect of the syllabus that you want to make sure that you understand pretty well in order to increase your chances of passing the examination. So that is the second key thing: performance evaluation, common size analysis, ratio analysis, or budget variance analysis. One of these three guys will be in the exam hall. For your information, all of the three have been asked by the examiner. So don't go and do any ratio and proportion and say, oh, he brought this, so he will bring this. All the three have been asked by the examiner already in the last 5 examination dates. So in August, one of them will be there. Which one will be there? Learn all the three. And we're going to be going through all the three as well as we continue with our discussion. So number 1, financial statement preparation. Number 2, performance evaluation using the common size analysis, using ratio analysis, or using the budget variance analysis. Then we go to the third thing, number 3, and that is going to be the issue about public-private partnership arrangements. Public-private partnership arrangement. Public-private partnership arrangement. This is a 10-mark area that the examiner will visit to share some love with us. Now, you know, government alone cannot undertake the expenditures or the projects, okay? Because if government alone want to finance the activities, I mean, how can government do that? Especially if you look at where we are at now. I mean, Ghana is literally broke, and nobody wants to even lend money to Ghana because for some reason our leadership have been unfaithful with the resources entrusted to them. IMF, World Bank, they give you money, then you come and lie about it, about the money that they give you. Lenders are lending you money and you're not keeping records accurately. So even now, government is desperate because on the international market, Ghana cannot go and lend money because our rating has been degraded. Even on the local market for this year, as government tries to issue treasury bill and various government bonds locally, people are not buying it. It is undersubscribed. So how will government finance its activities when there is no revenue coming in? And that is one of the reasons why the government is so desperate about the e-levy thing, so that government can generate a lot of revenue to supplement its expenditures at the end of the day. So to help government to provide the infrastructure facilities we need, the road, the hospitals, the schools, the bridges, and everything that we need, government must then partner with a private individual to provide those infrastructure facilities. And that is where public-private partnership arrangements comes to being. That is where public-private partnership arrangements comes to being. So under this, also, there is a 10-mark question that the examiner is going to be throwing at us, and we should be on the lookout to be able to answer the question very well in that particular case. Now, a number of issues that you have to make sure you know here will include the objectives of the public-private partnership arrangements, the principles of public-private partnership arrangements, the limitations of the public-private partnership arrangements. We're going to also look at the types of public-private partnership arrangement. And there are various types of public-private partnership arrangements that you need to be aware of and know about. We have what we call the build, operate, and build, own, and operate. We have build, operate, and transfer, like both. We have maintain and operate. We have the service concession available. We also have the issue about design, build, operate, and transfer. So there are various types of public-private partnership arrangements that we will be going through. But when it comes to this 10-mark area, these are the key issues that we need to focus on, that we need to look out for us to increase our chances of passing the examination. So that is the third huge aspect that we have to share our thoughts on. That is the third huge aspect we have to share our thoughts on. So number one, financial statement preparation. Number two, evaluation of the performance of the government using common size analysis, ratio analysis, budget variance analysis. And then number three, public-private partnership arrangements. Please, if there are any questions, you raise your hand, I bring you up, or you drop it in the chat for me. Then the fourth thing that we need to share our thoughts on, number four, will be the issue relating to the introductory aspects, and that will be the issue relating to accounting basis and techniques. Accounting basis and accounting techniques. This is an area that the examiner, all other things being equal, question 1A is going to be measured, or is going to be relating to accounting basis and accounting techniques. Now, when we talk about accounting basis, we are talking about issues such as cash basis of accounting, how transactions are recognized in the books, accrual basis of accounting, and then we have the modified cash basis. We're going to go through all these, don't worry, later on. So, and then we have modified accrual basis as well. The accounting techniques, on the other hand, include things such as fund accounting. Okay, you know, there are various funds of Ghana. We have the consolidated fund, we have the contingency fund, we have the Ghana Education Trust Fund, we have the COVID fund, we have the a lot fund, sinking fund, and all that. A couple of the funds have been collateralized by the government, meaning the government has used the fund as a collateral facility to take loan. Now, we've heard about the Minister of Road and Highway, mentioning on the floor of Parliament that even the e-levy fund will be collateralized to take loans. That is why it has to be approved as soon as possible. So there are various funds of government. We're going to look at some of these funds and look at how fund accounting actually works. We also look at things about commitment accounting. That's also another technique of accounting. Now, the purpose of commitment accounting is that you're going to recognize a transaction by evidence of awarding a contract or sending out a purchasing order. So once you place an order for the thing, set aside the money for that item. And we're going to look at that later on. Then we also have what we call vote accounting as well in that particular case. We also look at vote accounting as well in that particular case. So these are the things that you need to understand when we talk about these two items in that particular case when it comes to dealing with accounting basis. So that is accounting basis and then accounting techniques, something you don't want to take for granted. Then in understanding these things, there are two other issues that I want you to pay attention to: measurement basis. We'll get into all these later on, as well as qualitative characteristics of financial statements. Qualitative characteristics of financial statements. So these are the things that you need to understand. The fourth key aspect of the syllabus that we need to focus on to increase our chances of passing the examination. So the accounting basis, like I said, cash accounting, you recognize the transaction when cash is received or paid. Accrual accounting, you recognize the transaction immediately the transaction takes place. Modified cash basis, it is where you leave the books open 3 months after the year end in order to capture transactions relating to the previous year, which are occurring or which are being paid for or received in the subsequent year. Then fund accounting, commitment, vote accounting, we'll get into all of these things also. So that is the fourth key aspect of the syllabus that we need to make sure we pay attention to and know a lot about as we head into the exam hall. Then we come to number 5, and that is public procurement. public procurement. Again, this is also all other things being equal 10-mark area that the examiner may shower a blessing on us in the exam hall that we must know about, because it's very important in that particular case. So public procurement is a huge area. It's a lot, very voluminous, but you need to, we will go through it as well, but you need to make sure you understand some of the key issues here. For instance, the methods or approaches of public procurement in Ghana. We need to understand the roles of the Public Procurement Authority, PPA. We need to understand issues relating to disposal of government stores. Very critical. Then we need to understand procurement of consultancy, huge area. Then the processes of procurement, processes or stages of procurement, as well as the principles of procurement. A lot. It's a lot here. There are a lot of things here that we need to understand in that particular case. So you want to make sure that you understand this very well. It's a 10-mark area, but quite voluminous, okay? 10-mark area, but quite voluminous. And that is the fifth issue that we must understand and pay attention to, because definitely the examiner is going to be showering some blessings on us there, and we don't want to take that for granted when the examiner is blessing us with 10-mark question from these areas. Then we go on to number 6. The sixth thing that the examiner will be bringing to us will be issues relating to some other aspect of the syllabus that I will describe as introductory issues. So introductory discussions. Now, this is where issues such as users of financial information will be needed. Issues like gift miss, we'll be explaining these later on. That is the Ghana Integrated Financial Management Information System. Then the roles and responsibilities of the following. Roles and responsibility of the following. Don't worry, we'll get into them later. We have the public principal account holder. We have the principal spending officer. Now, the principal account holder is the government appointed person. Then the principal spending officer is the senior most administrative head of the government entity. So, for instance, the Minister of Finance is the principal account holder for the Ministry of Finance. Then the chief director at the Ministry of Finance is the principal spending officer. That is the senior most administrative head of that particular entity or that particular organization in that particular case. Then we were going to have the boss himself, Minister of Finance. What are his roles? We're going to have the Auditor General. What are his roles? We're going to have the Controller Accountant General. What are his roles? We're going to have the Public Accounts Committee. What are their roles? We're going to be sharing some thoughts on parliaments. What are their roles as a legislature? Then also the Internal Audit Agency. A lot of things there, just a lot of things. Then also the administrator of the District Assembly Common Fund. Administrator of the District Assembly Common Fund. So all these people, these are all introductory discussions that the examiner can throw at you that you must know about as you go into the exam hall. We may have some 5-mark questions, 3-mark questions coming in from these areas that you must be aware of. Users of financial information, gift miss, roles and responsibility of these various individuals. 1 or 2 of the 9 that I've listed here that the examiner may want to share his thoughts on that you have to be aware of as you go into the exam hall. okay, that you have to be aware of as you go into the exam hall. So that is the sixth thing that we need to focus on. So just a quick recap again. Number one, financial statement preparation. There are a number of things there that we have to pay attention to very well. Number two, performance evaluation. There are a number of things that we need to pay attention to very well. Number three, public-private partnership arrangements. There are a number of things that we need to pay attention to very well. Number four, accounting basis and accounting techniques, measurement basis, and characteristics of financial statements. Very crucial, very basic. We must know about these. Then public procurement, a number of things that we have to pay attention to. And then number six, some introductory discussions. With all these in mind, we bring home to number 7, and that is going to be public sector budgeting. Public sector budgeting. Again, this is a huge area that the examiner may or may not share any thoughts on. I mean, it hasn't been an exciting area for the examiner so far, but it's a huge area in the syllabus that we must know about. A number of things we need to pay attention to will be the role of the various people that I mentioned earlier when it comes to budgeting. So for instance, what will be the role of the Minister of Finance in budgeting? What will be the role of Parliament in budgeting? What will be the role of the Principal Spending Officer in budgeting? So we must know the roles of these people when it comes to budgeting. Then there are various approaches or methods of budgeting that we must know about. Zero-based budgeting, incremental budgeting, program budgeting, activity-based budgeting. We must know all of these types and forms of budgeting because they are crucial as well there. Then we must know the general process of preparation of budgets. So the general process or stages of budget preparation. It's also something that we must know about. It's a whole cycle that we need to go through and know about because it's going to be basic, it's going to be fundamental for us to pass the examination. But in addition to these things, there are a couple of few issues that we need to spend time to know about, and that is going to be issues about mid-year review. Mid-year review, you must know about that pretty well. Supplementary estimates, you must know about that also well. Now, mid-year review, you know that before 31st of July, every year, the Minister of Finance is required by the Constitution to present a mid-year review to Parliament to account for the last quarter of the year under review, and also the first year of the current year implementation of the budget, how government has implemented the budget. Now, it is at that point when the Minister of Finance and the central government recognizes that, hey, we need some money, or we will need more money because we are not able to meet our revenue targets, then they will request for what we call supplementary estimates. That is additional funding so that they can pay for the various expenditures that must be paid for. So we must know about how that is done, when it is done, and what it goes through. Then also we must spend some time knowing about, so the mid-year review, supplementary estimates, we must know about that. Then environment, we must know about the concept of environment. Environment has to do with using money that is approved for a certain expenditure for another expenditure item. There are principles that govern environment. There are reasons or basis for environment. We must make sure we understand all these pretty well. So budgeting in the public sector is a huge area. It's an area that you want to make sure that you also look out for at the end of the day. So technically, if we talk about the public sector accounting and finance examination and the syllabus, this is what we are talking about. This is what we are talking about. This is what we are talking about. Any questions, please? You raise your hand, I bring you up, or you put it in the chat for me. Okay, so these are the things that we need to understand. Okay, having some comments on YouTube. Said, please, how can I join your Zoom class? You can enroll in our course online. 050. NhyiraPremium.com and enroll in the course, or you can send us a message on WhatsApp and we'll be able to provide you with directives there. And Koma Arthur Emmanuel said, hi, Nhyira. How different are these IPSAs from the IFRSs and IASs? They are not too different, but the rules are a little bit, there is just a marginal difference between them. So like I listed here, where is it? Something like IPSAS 5, borrowing cost, is the same as IPSAS 23, IAS 23, borrowing cost. IPSAS 12, inventories, is the same as IAS 2, okay? And then IPSAS 17 is the same as IAS 16, property, plant, and equipment. So technically, there are some IPSAS that are not in IASs. Are you getting the idea? There are some IPSAs that are not in IASs that we must know about, but they are not too different. They are not too different. Michael Tete said, good evening, sir. Please, how often does ICA repeat past questions? Please, there is no repetition of past questions in public sector. So you make sure you learn well. And if you are looking at the past questions, look at the past questions just to have an idea of the structure of the exams, but not that something in the past question will be asked by the examiner. Forget about it. So just look at the past questions as a way to have an understanding of how the syllabus is structured, but not necessarily that something from there will come in the syllabus. Okay, Bernard, your hand is up. Please come up.
Yeah, so please, good evening.
Yeah, good evening.
Yeah, I would like to find out this issue regarding to the basis of accounting being prepared by the public sector. Mostly the PFM and the ISAs requires that public institutions to prepare the account fully based on accrual basis.
Right.
But I realize most of the accounts being prepared are cash and modified cash.
Yeah.
Yes, with this regard, does it mean what is stated in the PFM is not being implemented so far?
No, I told you that the IPSAS is in an implementation stage. So by 2023, it is hoped that all government institutions will migrate to the full accrual basis. So the purpose for the PFM Act is because government adopted the IPSAS. That was why the PFM Act was passed in 2016 to support the implementation of the IPSAS. So I think it's because of the phase implementation. By next year, hopefully, all the entities would have migrated to prepare their accounts on the accrual basis. So it is not that they are not adhering, it is the implementation of the accrual basis in a phase stage. That is why it is done that way.
Okay, thank you, sir.
All right. Any other questions for me, please? Any other questions for me?
Yes. So you handle it. I don't understand the boys. What is so difficult about this issue?
Hey.
So you handle them. Thank you. Okay, all right.
Yes, I can't even mute him. Abdullah, please mute yourself. I can't even mute you. All right, thank you. Okay, so these are the key areas we need to focus on to pass the exam. Now, after we've looked at these key areas, there are a number of acts and regulations that we must know about. And these are the acts and regulations that we must know about. We're going to be referring to them one way or the other as we go through the topics at the end of the day. So these are the various regulations that you must be aware of. What Bernard referred to a moment ago, the Public Financial Management Act 2016, Act 921, is very basic. A lot of your questions will be coming from the Public Financial Management Act 2016, Act 921, because the roles, budgeting, revenue, expenditure, accounts preparation, various things will be coming from the Public Financial Management Act. So please, it's an act you don't want to take for granted. I think you can download it under the first video. When you open the public sector lecture, you can download this act there. Then we have the Public Procurement Act amended 2016, Act 941. Did I say 941? 914. It's also one of the fundamental acts we'll be referring to under procurement. Certainly, you know, the 1992 Constitution, we can't go away with that. Then the District Assembly Common Fund Act, because we're going to be dealing with some issues about the local assembly, the sources of revenue to the local assembly, the expenditure in the local assembly, the role of the local, the administrator of the District Assembly Common Fund. We have to refer to this act. Then the Public-Private Partnership Act 2020 Act 1039 is, you know, public-private partnership is one of the key topics we said the examiner is going to be setting questions on. So this act will give us the guideline on what has to be done when it comes to dealing with the issue about this particular one. Then the IPSAS, I think we referred to that also a moment ago. So the IPSAS is also one of the issues that we'll be looking out for a bit later on in our discussion. So when we get there, we will look at that. Then the Public Financial Management Regulations 2019. The Public Financial Management Regulations 2019. This one will help us in topics such as the GIFMIS, that is the Ghana Integrated Financial Management Information System, budgeting. There are some references that has to be made to the Public Financial Management Regulations 2019. Then when it comes to revenue management as well as a topic, there are some references that we will make to the Public Financial Management Regulations 2019. Then when we are talking about sources of revenue to the government, Petroleum Revenue Management Act 2011, Act 815 is also one of the issues that we need to pay attention to and look out for, because we will be making references to it. Most importantly, the reason why we need to understand something about that act is for us to deal with evaluation of financial statement. And I'm going to explain this to you pretty later on, because there is the annual budget funding amount, which is the annual amount that from the petroleum revenue that government uses to finance its expenditures each year. And when that revenue is included in the revenue, when we are doing ratios, we have to do non-oil fiscal balance, non-oil primary balance. So when you're dealing with non-oil primary balance, then the annual budget funding amounts must be excluded. And we're going to explain how that works later on as we continue with our discussion in that regard. So then we come to, okay, I think that should be all. So these are some fundamental regulations that we are going to be referring to in our discussion as we continue. The Public Financial Management Act, the Public Procurement Amended Act 2016, the 1992 Constitution, the District Assembly Common Fund Act, the Public-Private Partnership Act 2020 Act 1039, the IPSAS, definitely, the Public Financial Management Regulations, then the Petroleum Revenue Management Act. So we're going to be referring to them gradually as we take the topics one after the other. Now, let me say that generally, our discussion is going to be coming from my book on public sector accounting and finance. So not everything that we're going to be giving notes or dictating notes. Literally everything is going to be coming from the book. A couple of you have it already. So if you have it, we just refer to it and we'll be going through the materials from the book, and it has questions also at the end of it. A lot of questions there to help you to deal with final accounts and other topical areas. So the primary source document for the lecture is going to be this book on financial management, on public sector, that we're going to be referring to at the end of the day. But like I say always, it is not compulsory. I don't shovel my books on the throats of students. So if you have any other public sector book that you think you are okay with, fine, you can stay with that, and that is okay. If not to, then you can get this at 120 Ghana cedis, and it will help you also to study. But like I said, primarily, everything we're going to be doing will be coming from this book. Okay, so now that we've dealt with that final thing How do you study the paper? Let's look at that and let's begin the journey in the next 5 minutes. So how do we study the public sector paper generally? How do we really study for the exams? Now, because this is a written paper at the end of the day, written and computation, sorry, at the end of the day, so written or comments, and then some calculation coming in. Because it's a reading area, you need to be able to read. And for those of you who don't like reading, you have to find ways and means to read it. So what I would recommend to you is that you need to be able to prepare summary notes for all the topics that we will go through. Prepare your own summary notes and let that summary notes become your guide that you go over on regular basis. You go over to make you or to help you to understand what exactly is going on. So that it's not every time that you have to pick the whole book because it becomes overwhelming. So have a summary notes. I don't know if it is in your diary, it is in your whatever the heck it is that you want to write in on your iPad. Keep summary notes because that is the only way you can remember these written things so that you can prepare well for the examination and pass the exams. So one way for you to increase the chances of passing the exams is by keeping summary notes. Very basic, very, very important. The second thing that I will say is that because it is a summary note, it is important for you to more written papers, more written topics. It is important for you to maybe listen to the audio as much as possible. So it could mean that when you are studying, you record your own voice and then you play that back over and over again, or you use our mobile application. Because with our mobile application, when you open a lecture, you can close and be doing something else, and the audio will be playing in the background. So listening to the lecture over and over again. Maybe you are at the gym, maybe you are driving, maybe you are cooking, maybe you are washing. Then the audio is playing in the background. Consistently, it helps you to retain a lot of information because science has proven that if you engage more senses in what you are learning, it increases your retention at the end of the day. It increases your retention at the end of the day. So keeping summary notes, listening to the audio is going to be very crucial to increase your chances of passing the examination. And then the final thing I will talk about is consistency. It's a reading paper. When you read and put it down, you don't go back to it again, you will forget it. So you need to be consistent. How consistent should you be? It depends on the time you have available at your disposal. But I don't want you to wait. Some of you, after today's lecture, you won't open your book again next week before you come and open the book. If you go with that approach, your chances of passing the examination is 2%. If you open the book only when we have lectures, your chances of passing the exams is 2%. So you have to be consistent. Go over the lectures before the next lecture, before the next lecture. That way you put yourself in the position to be able to ultimately pass the exams, to be able to pass the examination. So please make sure you pay attention to that very well. Keep summary notes, listen to the audio, be consistent. On the overall, we've already stated to you in the orientation class, we mentioned that we want an overall best students in the public sector exams coming in. So you want to make sure that you aim to be the overall best students so that when you are falling, you will still pass the examination. And we have our 1,000 Ghana cedis available to the person who is able to give us that and score the highest mark coming in August 2022. So how do you study and pass the exams? Keep summary notes, listen to the audio, be consistent, and have a bigger vision for yourself or goal for yourself that I want to be the overall best, so that even if you are falling, you fall and you still cross the 50% and pass the exams. So that is the overview of the exams structure, the regulations, and also how you study for the exams. Any questions, please? Any questions? Any questions? Okay, so that's it about our overview. Now let's begin the journey with some of our real issues to be talked about today as we begin the journey. So, introduction to public sector accounting and finance. Introduction to public sector accounting and finance. In this discussion on introduction to public sector accounting and finance, we'll be looking at what is public sector accounting, the meaning, types of public sector organizations, comparison between public sector and private sector. Why do we have to keep accounts in the public sector or for public sector entities generally? Then we will look at how we're going to be keeping the account, sharing our thoughts on it. Then we'll answer the question, who is required to prepare those accounts and for whom or to whom are those accounts to be used or to be prepared for at the end of the day. So these are the four broad questions that we want to answer: what, why, how, and who in the introduction to public sector accounting and finance. The discussion, by the time I finish answering these four questions, what, why, how, and who, that is boiling down to an operation 15 marks in the exam hall. That is boiling down to an operation 15 marks in the exam hall. So you want to make sure that you stay with us carefully, and then it's going to be a discussive session. So you make sure that if there is anything on your mind, you raise your hand, I bring you up, or you put it in the chat for me, then we can get excited about it and keep it going at the end of the day. Okay, so let's go. What is public sector? So let's start a journey with what? Now, before we get excited on what is public sector accounting, we need to ask ourselves, what is government? When we say the government of Ghana, like, what is government? Okay, so we're going to start a journey by asking ourselves, what is government? Then we will come to the second question is, what is government accounting? So what is government? Some social studies students, you learned and you forgot it. Now it is after you here. You thought it won't come again. Now it is here. When we say government, what is government? Any ideas? Any ideas? When we say government, what is government? Any ideas? You raise your hand, I bring you up, or you put it in the chat for me. When we say government, what is government? Any ideas? YouTube, I'm seeing a message coming up. It says, what? Thank you for asking the question on PFM, because there was a question in last sitting similar to that. Okay. Fred Johnson said, you are right, sir. 80% of PSA is theory, and the only way out is taking the summary. I sat once and hit the jackpot. Okay, that's fine. But it is no longer 80% because ratios are there. Final account is there. So it is not 80% theory like that. Yes, what is government? Any ideas? And I'm also name government.
Sure.
Yes.
Yeah, so government are institutions and individuals that run the affairs of the country.
Institutions and individuals that run the affairs of the country. Okay. All right. Yeah, so generally that is it about that. Government is simply the collection of institutions. So I'm going to just open up my slide here. So let's see and refer to my slide here. It's the collection of public institutions established and given the authority to run the affairs of what? The country. Okay, so when we say the government, we are referring to the collection of institutions who have been authorized to run the affairs of the country, period. That is what we mean by government. On that basis, these institutions are required to keep records. These institutions must show stewardship, because you see, at the end of the day, what happens in the public sector is that we have the government on one side, and we have everybody else on the other side, stakeholders or users, or let me say citizens. What happens is that citizens entrust government, okay, entrust government with a public purse. Literally, with a public purse, meaning that with the resources of the government, with the resources of the country, our oil, our tax revenue, we pay taxes and everything, it is entrusted to the government, So in other words, government then become a steward. A steward meaning taking care of these resources and using it for the betterment of the citizens at the end of the day. But then government must show its stewardship to the citizens. That is why accountability is crucial in the public sector. So accountability is going to be crucial in the public sector, and government shows its accountability through the preparation of financial statements, reports, and various other ways, holding town hall meetings and other things. It is a way that the government is showing what's its accountability. So the question then is, okay, how do we know how much resources was in the public purse that we gave to the government, and how much of that resources has the government used for the betterment of the citizens? The only way we can do that is if governments keep records. If governments keep records. But then records can also not just be, cannot also be kept anyhow. So currently, all records in Ghana are supposed to be kept in what is called the Ghana Integrated Financial Management Information System, GIFMIS. Now, for your information, this is something I'm not going to be teaching in class, the GIFMIS. So you can watch the video on the portal and read about it in the book. It is not everything I'll be teaching. So the thing that I want you to read on, I'll tell you, you go read on it. So your reading assignment is the GIFMIS. Go read on it. It's a very simple thing. It doesn't require any magical. So now government is required to, all government entities are required to keep their records using what? The GIFMIS, the Integrated Financial Management Information System. So the way these records are kept, classified, analyzed, and presented to the users is what we refer to as what? Government accounting. So this is the picture of the public sector generally at the end of the day. The citizens, stakeholders are on one side, the government is on the other side. We entrust you with the public purse. So like the president, I'm going to protect the public purse. We are sitting on money, but we are hungry. Now you come, the money is there, but we can't see. We are still hungry, but it is what it is. You entrust the government with the public purse, and government must show its accountability through its stewardship by preparing financial statements, annual reports, and also holding various town hall meetings to show accountability for its resources that has been entrusted to it. So that is the two things we must understand. Government is the collection of all public institutions and other authorities who are given the mandate to run the affairs of the country. And so in a simple language, we say government accounting. Give me a moment, I'm going to pick my slide up on the iPad directly so that it stops uploading here. Let's see. Let's put it on the iPad directly. Percent. Okay. So let me pick it up here so that it will not be updating and I would have to. So in that regard, when we talk about government accounting, it is the process of what? Recording, analyzing, classifying, summarizing, and interpreting financial information about the government in aggregate and in detail. Okay, in aggregate and in detail. So that is the first thing we want to ask ourselves. What is government accounting? We've answered that question. Now, these institutions that we talked about have been classified into certain categories. So the next question we ask ourselves is, what are the types of public institutions that we have? Now, for the purpose of our discussion, there are 4 types of public institutions that we must know about. There is what we call the central government. There is what we call the local governments. There is what we call the state enterprises or state-owned enterprises. And then the 4th thing is going to be statutory bodies. Statutory bodies. So these are the 4 types of public sector institutions. So all the institutions that have been established to run the affairs of the country can be categorized into these 4 areas. Now, when we talk about the central government, I mean, it is the central government, okay? So the central government deals with issues relating to something like the executive arm of government, the legislature, parliament, and various other constitutional bodies like the Electoral Commission. Now, you can see these in your book here on page 7. The types of organizations are here. So the central government has to do with the executive arm of government. I mean, the president, economic management committee, those people, cabinet, council of states, I mean, the legislature, parliament, and various constitutional bodies like the Electoral Commission, the Controller Accountant General, the Auditor General, the Ministry of Finance. All these guys are the central what? Government. That is the first thing. So all these institutions that are constitutional bodies, all these institutions that have that authority are referred to as the central governments. Then you see, governance, can not only be done fully if everything is done at the central government perspective. Hence, the second category is what we refer to as the local government. The local government is made up of the metropolitan, municipal, and district assemblies. The metropolitan, municipal, and district assembly. That is a local government. And the management funding of the local government is where we're going to be using the District Assembly Common Fund Act. Okay, we're going to be dealing with the District Assembly Common Fund Act later on and look at how the local government, their sources of revenue, their expenditure, their budgeting and all that. We're going to be dealing with that later on. Then we have state enterprises. The state enterprises are state enterprises. I mean, these are enterprises in which government owns majority of the shares in the company at the end of the day. So either it is totally 100% owned by the government or government owns majority of the shares in these entities. They become what? State enterprises. And we have various ones like the Electricity Company of Ghana, the famous ECG, Volta River Authority, VRA, Ghana Water Company Limited, Tema Oil Refinery, one of the institutions that I don't know what they do in this country, but we move. Gridco, I mean, all these are there. These are all state enterprises. Either government owns 100% of these companies or government owns a majority of the shares in these organizations. And so that is the third category, state enterprises. Then we have the fourth category, and that is statutory bodies. statutory bodies. Now, these are bodies that are not established in their constitution. In other words, they are non-constitutional bodies. Okay, they are non-constitutional bodies. Now, when we say something is non-constitutional, it means it is not directly enshrined in the constitution. Instead, they were established by an act of parliament. Okay, so these statutory bodies were established by an act of parliament. By an act of parliament. So these are the statutory bodies. Unlike bodies such as the Electoral Commission, okay, the Controller Accountant General Department, the Auditor General Department, the Judiciary, the Ministry of Finance, which are constitutional bodies, because in the 1992 Constitution, there is specific subsections that relates to these bodies. The other ones are not directly in the Constitution, but they were established by an act of parliament, and they become what we call statutory bodies. Some of these include things such as public corporations. Okay, so all the public corporations were formed under an act of parliament, and so they become statutory bodies at the end of the day. And so the Ghana Broadcasting Corporation is a statutory body, GBC, the old GBC. Then the National Petroleum Corporation, Ghana National Petroleum Corporation, GNPC. It's also a state-owned enterprise. Did I say state-owned? Statutory body, because it was established by an act of parliament and other regulatory authorities at the end of the day. So all government institutions can be categorized into these four: central government, local government, state enterprises, and statutory bodies. Any questions, please? You raise your hand, I bring you up, or you put it in the chat for me. These are the four statutory bodies. Okay. So once we've looked at the types of the the types of public sector organizations, the question we then ask ourselves is, what is the difference between public sector accounting and private sector accounting? Any ideas? Yeah, a lot of ideas. Maybe let's put this in a tabular form. We'll put this in a tabular form. And this one, everybody will share some thoughts. I need 5 points, then we are out of this one. Let me see if I can put a table down here. Simple table. Nhyira cannot draw. Nhyira, oh my goodness. So let's go. So we're going to put the points here. We're going to put public sector here. And then we're going to put private sector here. I need 5 points. Differences between public sector and private sector. 5 points. There we go. Yes, what are the differences between public sector and the private sector? Any ideas? Differences between public sector and private sector? Yes, Oxbet.
In the points, in terms of welfare or social devices, the public sector exists to provide service to the citizen as a whole, but the private sector does maximize the welfare of the citizens.
Come again. You said the private sector seeks to do what?
Private sector seeks to maximize the welfare of the shareholders.
Maximize the welfare of the shareholders. Okay, so if I get you right, it's like the objectives. So the points can be the objective, so that in the public sector organizations exist to provide goods and services that maximize the welfare of the citizens. Okay. And in the private sector, they provide goods and services, but they are to maximize the wealth of shareholders. So provide goods and services to maximize the wealth of shareholders. Even though that primary objective is now changing, now companies don't just exist to maximize the wealth of the shareholders. I mean, there are other reasons that why they exist, but primarily they are there to make money to the shareholders. Yes, Godwin.
Okay, so in terms of profit determination,
Okay.
The public sector institution does not have interest in profit, whilst the private institutions have interest in profit determination.
Okay. So I don't want to use the word profit. I want to use another word instead of profits, though. But so private sector exists to provide goods and services to all citizens, irrespective of their ability to pay. I'm trying to polish the point and integrate it a little bit. Their ability to pay. But the private sector exists, so it provides goods and services to people based on demand and ability to pay. In other words, what you are saying here is that there is no intention to make profit here. But here there is an intention to make profit. Godwin, did I bring your point home? I don't know.
Yes, sir. Yes, sir.
Okay. All right. So that is what we can say there in that case. Bernard Addo, your hand is up. Give me some apology.
Yes, sir. So please, when it comes to the establishment and the ownership, so the public sector is being owned and controlled by the state, while
Right.
the private sector is being owned and controlled by individuals.
Good.
And
So,
also, further with the basis of the accounting and preparation of the financial statements.
Right. What do they do? Should I want to try and throw a how? Should I want to throw a?
As initially, you know, the public sector, the basis as comprises of the accrual basis, cash basis, and modified. Yeah. But when it comes to the private sector, since they go,
it's purely
the accrual basis.
Right. That is true. So they are established. So public institutions are established. By government, established by government. So they are established by government and funded by the government. But this one, private entities are established by individuals with control by shareholders. With control by shareholders. So yes, we can say that there. Now, this is different from state enterprises, okay? State-owned enterprises, they are supposed to make some profits. I mean, it is only in Ghana here. I don't know why Ghana, we do some of the dumbest things in this. I don't know, sometimes almost all the state enterprises make huge losses, very huge, big. But the bonuses they take, their salaries, allowances, emoluments, you ask yourself, what the hell did you do throughout the year? They take.
The thing is witchcraft.
I mean, you think about it, you don't even understand. These state enterprises are making losses, huge, but they take allowances, big DSTV allowance and co. You're like, what the hell is that? So for the state enterprises, they are there. Yes, they not necessarily for them to make huge profit though, but they are not to make losses because they are part of the problem of this country. The state enterprises, they make a lot of losses. And why do they record those huge losses? Because the bonuses they pay themselves, their salaries, their emolument is far bigger than the revenue they generate. Yet, we still continue to fund their lifestyle. I don't know this country, what is wrong with this country, but that is why some of you, if you come, you will change it. Okay, I'm praying that if you come, you will change it. Okay, I know you will change. Okay, Abdullah and Cecilia and Co will be leading the squad and they will change. In case you go, so come and chop the money, then that one we will be after you. Then let me put the second point down and I'll bring Cecilia up. There was another point about accounting basis. Let's put that down. So accounting basis. Like we said, currently all public entities, okay, are using either cash, modified cash, and accrual basis. Okay, but from 2023, all other things being equal, they will all shift to accrual. Okay, but in the private sector, it is purely what? Accrual basis of accounting. Does that make sense? Purely accrual basis of accounting. Yes, Cecilia, share some love.
Oh, okay. So with the funding,
Right.
with the public sector, their public funds is through the taxation and their partnership with development partnership. I don't know if I'm right or something.
Yeah.
And the private sector is through their capital and their profits they make or capital.
Okay.
Investors from investors too.
Okay. So if I get you right, you are like, yes, I get a point. So let me see if I can crystallize it. Then let's see if that is what you are saying. So you are saying that when it comes to funding, the public entities are funded through the consolidated fund.
Yeah.
And donor partners.
Yes.
Something like that, right?
Yes, please.
But then when it comes to the private sector entities or private entities are funded through retained earnings and capital contributed by the owners of the business.
Yes, please.
Okay. That's right. Capital contributed by the owners. Okay, so that's fine there. That's fine there. Now, certainly the two of them also use loan at the end of the day. So that will be similarities. Okay, that will be similarities because they all use loans. So how many points we got? What? Okay, so objectives, we've labeled it out. We said we want to maximize the welfare of the citizens. Okay, welfare of the citizens. We want everybody to have good water. Okay, good electricity, school. Okay, that is why when the COVID came, we gave you free water. Okay, but then now you are paying for the water. I don't know. It's only this part of the world that they say something is free, but later on you pay for it. Just concert party. But we move. Welfare of the people, so you can wash your hand. Oh, sometimes when I sit down and think about this country, it's funny. You come and say, oh, we want to take care of the people so you stay healthy. Agbene, you say we should pay for the water. When we didn't, not everybody even enjoy the free water, but we are paying, we will pay. In the private sector, we are not there to welfare of any person at the end of the day. We are there to make money, okay, to our shareholders. So we want to maximize the welfare of the shareholders. Profit-wise, private sector entities don't exist to make profit. Ministry of Education, they don't exist to make profit. Ministry of Finance, they don't exist to make profit. Ministry of Gender and Social Welfare, or whatever the heck, they don't exist to make profit. So they are there to provide goods and services to people, irrespective of their ability to pay, technically, okay? But private sector entities provide services to people based on their ability to pay, and we want to make profit, yo. We want to make profit at the end of the day, okay? So we want to make profit. Establishment and control. Public sector or public institutions are established by the government and funded by the government. But private sector entities are established by individuals with control by their shareholders. And then certainly accounting basis. Public sector accounts are prepared using either cash basis, modified cash, and accrual basis. But like I said, all other things being equal, by 2023, everybody will go to the full accrual basis. But in the private sector, it is purely accrual basis. Then funding, what Cecilia mentioned, public sector entities are funded through the consolidated fund and donor partners, but the private sector entities are funded through retained earnings and capital contributed by the owners of the business. So yes, these are some differences. Any other points? I wanted 5, I have 5. Any other thing we can mention? Any other thing we can mention? Appointment of the board of directors. Yep. Oxbert, come.
Yeah,
Oxbert, you can come.
Yeah, so I want to make this point so that you see whether it is acceptable or not.
Okay.
If we talk of execution of projects, public sector will execute a project whether it has positive returns or not. But the private sector will not, may not execute such a project for
Right. So we can put a point down as maybe project appraisal and implementation. When government is undertaking a project or public sector entities are undertaking a project, they select the project based on the impact of the project on the welfare and the standard of living of the people. Okay, so projects are selected, okay, based on the value for money, and the impact of the project on the standard of living, of the beneficiaries. That's the goal. That's the goal. Who will do free SHS? Yeah, I mean, free SHS, like, what the hell are you getting from free SHS? But all other things being equal, the more educated people you have, the more your standard of living go up. Only that the kind of education we have in this country for the free SHS, I mean, I mean, it's nothing to write home about. When we were writing 4 years, we didn't sit up, and this kind of taught school that they are going now. But all other things being equal, people's standard of living will be increased when they are educated like that. Okay. Then value for money. The concept of value for money has to do with the issue about the 4 E's. So in public sector, when government is undertaking a project, government looks at value for money ultimately. Every government expenditure must achieve value for money. Please give me a moment. Okay, let's go. So when government is selecting a project, they select a project based on value for money. Now, value for money is one of the issues in your syllabus. Okay, and so I'm just explaining the concept. I'm explaining the concept literally here. So make sure you follow me very well. So whatever expenditure government undertakes, they are looking for value for money. So one district, one factory. Is there value for money in there? Free SHS. Is there value for money in there? NABCO. Is there value for money in there? Over interchanges. Is there value for money in there? Everything is value for money. But what the heck is value for money? Value for money, to assess value for money, there are 4 key elements or components that we must discuss when we talk about value for money. The first one is called economy. Economy. What the heck is economy? Economy simply means obtaining quality resources at the least cost. Obtaining quality resources at the least cost. Please, yes, we want to pay as low as possible, but we want quality. So for those of you who go to the market and you will see tomatoes, then you see tomatoes. The tomatoes is rotten. There are a lot of housefly hovering around it. But for some reason, that is where some ladies will go and they go and buy that tomatoes because, I mean, it's cheap. That is not economy. When we say economy, that's not what we mean. Go and buy into some potoye and into that is rotting and smelling and doing things. Then there is another tomato somewhere, 3 for 5 cedis or 5 for 10 cedis. They won't go there and buy that one. I don't know why. Oh my goodness. Then someone said that if you use it for the stew, it makes the stew nicer than using the nice tomatoes. Who tells you that? Why do you do that, ladies? I don't know. But we move. So economy means obtaining quality or the resources at the least cost. So we are not substituting quality for the price. Okay, we want the best, but we want to pay as low as possible. It is for this reason why government has to always use competitive tendering. We'll look at this later on under procurement. It is why government uses competitive tendering in procurement of goods and services. Because if you don't use competitive tendering, then you're going to pay exorbitant prices for projects. You're going to pay exorbitant price. If you use sole sourcing or single source, we'll explain this later on, we're going to be paying more. But the first thing about value for money is what? Economy, obtaining quality resources at the least cost. But once the resources are obtained, they must be put to use. So the second component of assessing value for money is efficiency. What is efficiency? Efficiency simply has to do with comparing our input versus the output. In other words, efficiency means obtaining the best possible outcome from the utilization of resources. The best possible outcome from the utilization of resources. That is efficiency. So if we look at what we put in and what we are getting from it, is that what we wanted? Efficiency. Efficiency. We are comparing the input with the output. So for instance, if governments buy fertilizer and subsidize the fertilizer and give the fertilizer to the farmers, and at the end of the day, farmers' production doesn't yield as much as it's supposed to be yielding, that means, the fertilizer was not used for the intended purpose, or they were smuggled outside the country. So that is efficiency. We are comparing the inputs with the outputs. Now, the fact that the resources are being utilized does not mean they are utilized for their intended purposes. And so the third thing that we look out for in assessing value for money is effectiveness. Effectiveness simply means whether the resources are being used for their intended purpose or they are being used to achieve the intended goal. Okay, so effectiveness has to do with the utilization of resources to achieve the intended purpose, the intended goal or purposes. That is effectiveness. So are we using it for the intended purpose? If no, then it's not being effective. Then the last one is equity. Equity. You know, every government expenditure should be equally distributed to all the beneficiaries. Okay, so equal distribution. So if there is something that government is doing in a certain region and is doing a lot of those things in that region at the expense of other region, no matter how cheap it is, no matter how efficient it is, no matter how effective it is not equitable. Why? Because the resources are not being what? Distributed to all beneficiaries. So equity has to do with the equitable distribution of resources to the intended beneficiaries. So for instance, again, the fertilizer situation. So government procures fertilizer and subsidizes these fertilizers or procure and want to share it to all the cocoa farmers for free. Okay, how much did government pay for these fertilizers? Economy. Is it the best fertilizer from Russia? Yeah, definitely. All those places. Yeah, it's the best coming in. Okay, is the fertilizer bringing more yield? Right? Efficiency. Okay, are the fertilizers used in Ghana or people are smuggling the fertilizer outside of Ghana? Effectiveness. Did all the cocoa farmers get the amount of fertilizers they were supposed to get as per the program or the plan for the distribution? Equity. When these 4 boxes are checked, then we can say value for money. But you see, you cannot achieve these things in 1 year. So it is difficult for government to really assess value for money. So even though they talk about it every time, you can only measure value for money after the project has been implemented and carried out over a number of years before we can really say, oh, this thing, we achieve value for money at the end of the day. So that is the concept that we must understand. When it comes to the project appraisal, government selects projects that will achieve what? Value for money, and they implement the project that will increase the standard of living of the citizenry. But then in private sector, we don't care about standard of living of people. Yeah, we want to provide quality products though, but we select project that will maximize the wealth of the shareholders. Okay, so for those of you who are doing financial management or management accounting, you will learn this under investment appraisal as well. So projects are selected based on the returns and how they affect the wealth of the shareholders and how they affect the wealth of the shareholders. Yes, Bernard, your hand is up.
Yes, sir. So I would like to find out this in terms of the performance, as you said, the 4 E's.
Yeah.
There's one thing I've also observed in terms of the environment which the project is being embarked on. The government will build projects in areas where even assessing it is challenging to even a community. For instance, boreholes and some government bungalows. So in this scenario, we add environment to it.
Yeah, actually, the concept of value for money is developing a lot. And so there are various other factors that government takes into consideration in selecting projects actually that we will say it achieve value for money. So yes, environment is something that can be looked at, and even the impact of the project on the people will also be something that we'll look at as well. So for instance, some of the schools that were established, the e-blocks that were established under the NDC administration, allegedly, they said some of the schools were located in bushes that people have to, go take a lot of distance or walk a lot of distance before they can access those things. So yes, environment can be an issue that we have to consider as well. When we are looking at value for money, it's something that will come up, definitely.
Okay, so thank you. Further, in terms of the difference, I also like to add the classification of expenditure. Now, when you come to the public sector, the expenditure line has been on the giftness chart. It's mainly on compensation of employees, goods and services, assets, and the other items. But as codified by the International Financial Reporting Standard in the private sector, it also spells out the expenditure line of the private sector being cost of sale, general administrative costs, sale and distribution, costs, and all those stuff.
Right. So I want to see if I can put that under something. Okay, let's put it. Let's separate it on its own. That's fine. So let's put it on its own generally. Yeah, Japan, your hand is up. Please come up as I put on this point as well.
Yeah, hello, Shra.
Yeah.
Please, I would like to say that as we are trying to ascertain the differences between the public and the private, can we also look at the fact that the accounting standards, they differ as in even the regulations, whereas the IFSAS is in relation to the public sector. That of the IFRS and the IAS is associated with the private sector accounting.
Yes, we can say that. That is a point that we can say. So it's about the regulations that so let me put that one down. Let me finish with this. So expenditure classification as per the chart of accounts of government. But this one will be as per the conceptual framework. Then we can bring a Japan's points up finally. Then we should be out of this area. It's coming up. Okay. Then so we bring a Japan's points up as well there in that case. Japan, can you come again with your points?
I was saying that if you look at the public sector accounting, it's regulated probably with that of the IFSAS and other frameworks that we know, but that of the private sector is mostly associated with the IFRS and that of the IAS standards.
Good. So public entities are regulated by an act of parliament. an act of parliament, the IPSAS, and other directives from regulatory authorities. From regulatory authorities. But private sector entities, they are regulated. So private entities are regulated by the Companies Code or the Companies Act, IASs or IFRSs, and other directives from regulatory authorities. From regulatory authorities. Like the Bank of Ghana, National Insurance Commission, all these are regulatory authorities that regulate their activity. So yes, I mean, these are some of the things that we can bring up here. Okay, so let's catch up again. Objectives, profits,
Sir,
establishment and control. Yes, Oxbert?
yeah, so you were talking about the appointment of board members before I intercepted.
Oh, okay. Yep, we can add that as well. The difference is chow. You can add that as well. So appointment of board of directors. In Ghana, there, if you're appointed as a board member or a CEO of a company in Ghana, there, you have chop money. You have chop money. No wonder everybody wants to handle that role. Even if you make losses for 4 years, you will still be chopping money. Only in Ghana. I don't know this country. They have to sell this country and share the money for everybody. So board of directors are appointed by the president with some parliamentary approval. So board of directors are appointed by the president with advice from the Council of State. With advice from the Council of State. Those people too, they said they have reduced they are reducing their allowances of 20%. All these people taking money in Ghana, but you already have money. What are you doing in Ghana? My goodness. But I will also be Council of State member so that I can chop the money some. Board of directors here are appointed by the shareholders. By the shareholders. Then we can even talk about accountability. Okay. Public entities are accountable to Parliament, okay, and the citizen as a whole. But private sector entities are accountable to their shareholders and the regulatory authorities. Okay. So, I mean, the difference we can talk about a lot. That is also another one we can talk about, accountability. Public entities are accountable to Parliament, okay, whilst the public and the president, certainly he appointed them. But then private sector entities are accountable to their shareholders and regulatory authorities. So if you're in a banking environment, then you'll be accountable to the Bank of Ghana. If you're in the insurance industry, you'll be accountable to the National Insurance Commission in that regard. So that is also another difference that we can bring up. So I think we have a couple of points here. Anything else? And let's jump out of the differences between these two guys. Yes, Godwin.
So, what of non-financial asset and depreciation?
because we will be like, we are literally going to go with the accrual basis. I mean, they are all going to use accrual basis because in the exam hall, the financial statement we'll be preparing will be on accrual basis. So technically now in public sector, you don't write off capital expenditures. They must be capitalized if they meet the capitalization criteria as per the IPSAS, as per the directives from the Controller, Accountant General, and the Auditor General. So mostly, I mean, now we are on an equal grounds.
Okay, thank you.
All right. Okay, so that is also the differences between the entities at the end of the day. So that is what public sector accounting is about. So we said government is the collection of public institutions established and authorized to run the affairs of the country. That is what we mean by government. Then we said government accounting is the process of recording, classifying, summarizing, preparation, and interpretation of the financial statements. And we shared our thoughts about the accountability framework that the users, the citizens, entrust government with the public purse, with the public resources. And so government become a steward and must show its stewardship through accountability by preparing financial statements, annual reports, and holding various town hall meetings. Then we said that if that is the case, there are 4 types generally of all public entities. And we have the central government, the local government, the state enterprises, and then statutory organizations. Then we said, hey, what are the differences between public sector entities and private sector entities? And these are some of the points that we mentioned. But most importantly, we shared our thoughts also on the concept of value for money, that primarily public sector entities exist to provide goods and services that will be able to achieve value for money. So economy, efficiency, effectiveness, and equity. And then a concept of environment was raised, and I mentioned that, yes, value for money is evolving and so those can also be included and shared on in that particular case. So when we talk about public sector accounting, that is what we mean by public sector accounting. Now, the things that we've discussed, the key takeaway I want you to have is the differences between public sector accounting and financial private sector, and then the concept of value for money. These are the 2 key takeaways I want you to have in the what aspect we discussed, because these 2 things are things that the examiner can ask you in the exam hall. Differences between public sector entities and private sector entities, and the concept of value for money. So these 2 things are the things I want you to take away. And I'm going to be showing you the key issues for takeaway in everything that I'm mentioning, so that when you are preparing your summary notes and going over your discussions, you know where you have to focus on to increase your chances of passing the examination. Now, like I mentioned earlier, even though there are differences, there are also similarities. Okay, there are similarities between public sector accounting and private sector accountants. And you know the similarities, we're not going to go through that. But hey, they all provide goods and services at the end of the day. So they all provide goods and services. That's the first thing. Second thing, they all use debt to finance their operations one way or the other. Ghana, currently our debt stock is 351.3 or so billion Ghana cedis. And 351, that is about 82.1% of our GDP. That's a very highly geared country that we have there. So everybody uses debt. Okay, obia deka. Okay, obia deka. Obia bobosia. Obia bobosia antino. Ya bobosia. Membe jinahan kasa kasa. Obia bobosia. So they all provide goods and services. They all use debt to finance their operations. They are all accountable to the people who appoint them. Okay, so we have said that public sector entities are accountable to the president and to parliament. Private sector entities are accountable to their shareholders and their and the regulatory authority. So they are all held accountable at the end of the day. Then the issue about financial statement preparation, they all prepare financial statements at the end of the reporting date, only that it depends on the status of the organization. For instance, in some jurisdiction, and I think Ghana inclusive, listed entities are supposed to prepare financial statements quarterly. Like every quarter, you're supposed to issue a report to let shareholders know what is happening at the end of the day. In the public sector also, there is a quarterly, monthly reports that has to be prepared. So they all prepare reports, financial statements. And so these are some similarities that we can share our thoughts on. And they all use accrual basis of accounting as well. So when we talk about similarities between public sector entities and private sector entities, these are some of the thoughts that we can share in relation to that. These are some of the thoughts we can share in relation to that. So when we say what is public sector accounting, that is what we mean by public sector accounting. Sounds good?
Sir,
Yes, sir.
so if you are shorting or running out of point, can you say that they will both soon use accrual basis of accounting?
When no, I mean they all use accrual basis. You are safe there, because even though currently, like I said, not all public sector entities are using the accrual basis. At most, the accrual basis is used one way or the other. So I mean, just stay there and say they all use accrual basis, and then you'll be good there. Okay, so some chats on YouTube. Ankoma Arthur Emmanuel said, "Is the class always going to be on Zoom? I see both on campus and Zoom on the timetable." Yeah, we have on campus as well. Currently, public sector, all our lectures, all our enrollments are on Zoom. So if there is on campus, but classes are held as well on campus in that case. Hilton Boatin Karikari said, "Hi, Nhyira, watching you from UG Legon." Okay, shout outs to Legon students. Thanks for joining us, Eugene. Did I say Eugene? Hilton. Okay, let's go. Now that we've answered what public sector is, let's get into why. Why should we learn all these things that we have gone through a moment ago? Why should we know about government? Why should we know about government accounting? Why should we know about the basis of accounting? Why should we deal about value for money? Why? So let's deal with the objectives of government accounting. So objectives. So we are looking at the why, and that is the objectives of public sector accounting. Now, this is divided into two, like you saw. We're going to be looking at the objectives of government accounting, and then we'll look at the objectives of public sector entities. The objectives of public sector entities. So what are the objectives of government accounting? I'll go straight up into my slide and then share that with you. Very important. The reason why we are keeping records, the reason why we are keeping books, the reason why we are dealing with everything that we are going through, it's where we are discussing the issue about objectives. So number one, to fulfill the legal requirements. According to the 1992 Constitution, it is required that the Controller Accountant General or government prepares an account. So at the end of the year, you have to keep records, prepare financial statements, and have that financial statement audited by the Auditor General. So the idea at the end of the day is that all the ministries, departments, and agencies, metropolitan, municipal, and district assemblies are supposed to prepare their financial statements. That financial statement they prepare will be forwarded up to the Controller Accountant General, who then prepares the annual accounts of government. This annual accounts of government must be sent to AG, Auditor General. Parliament will get it as well. Government, the executive arm of government will get it, and citizens will also get it. Now, AG is going to be appointed to audit the financial statements. So AG will independently examine these financial statements as to whether they achieve value for money, as to whether they are kept in line with the laws, as to whether all revenues are collected and accounted for properly. So the accounts will be audited. Accounts will be audited. After the accounts are audited, AG sends his report to Parliament. When Parliament receives the AG's report, they give the report down to Public Accounts Committee, who further scrutinize the Auditor General's reports and the annual accounts of the various entities. And the entities that were found to be involved in some financial irregularity, who did not achieve value for money, or who kept dubious accounts, they will be called for and public hearing will be done so that we know what is going on. And if they are found culpable, we got to jail some people if we have to jail them. Or, as we know in this country, allegedly, the government will just be reshuffle. So somebody chop money somewhere, you just reshuffle and take the person to somewhere else, or give the person leave so that the person will go and rest a little and come back, and we move. Because that is Ghana for you. I mean, we move ahead. So to do this is according to the Constitution. This is enshrined in the Constitution. So when the MDAs prepare their accounts, Controller Accountant General prepare their annual accounts, Auditor General audits, Parliament receives it, Public Accounts reviews it, Public Accounts does a public hearing to do various recommendations. This is why we need to keep the accounts of governments. So that is the first thing, to fulfill legal requirements. That is the first objective of government accounting. We want to record, classify, summarize, interpret, and prepare the financial statements because we want to fulfill this legal requirements. 2, to perform the stewardship function. To perform the stewardship function. That is the second key thing. Remember, I told you already, Wilson, can you mute your microphone for me? Oh, trying to mute here, but I don't know. Okay, thank you. So to perform the stewardship function, like I told you earlier, the ruling government is entrusted with the resources the public pays. So at the end of the day, they must show accountability. If you remember the diagram we drew about accountability here, they show their accountability through the preparation of what? Financial statements and reports. Now, how do you prepare financial statements if you don't keep records? How do you prepare reports if you don't classify those records? So in order for government to execute the stewardship function and be held accountable and show accountability for the utilization of the resources entrusted to it, they got to keep what? Accounts at the end of the day, you know. Yeah, only that. I mean, sometimes the account is some way, somehow, and government is mentioning one revenue, and then IMF will come and say, hey, you are lying. This is not the money we gave you. Then you are like, who the hell is lying? Your own government is saying IMF gave us X amount. But IMF comes and say, hey, thou are lying. I gave you this amount. So you're like, now who do you trust? Your own government or IMF? But that's where we are at. So we move. 3, to enable government to plan well the future activities and programs of the nation. Definitely. Because utilization of the government's projects, we have to prepare reports on those projects. So that helps government to plan for the future. So if government looks at the annual accounts, okay, we spent X amount on NAPCO. We spend Y amount on free SHS. We spend Z amount on whatever the heck. What else do we have? One district, one factory. We spend A amount on one village, one dam. Okay. We spend X amount of U-Stat or Youth Stat. I don't know whatever the heck that one is, but they say the youth, they will give you money so that you can establish your own businesses and those things. We move. So if government implements all these things, records will be kept. So the government looks at, oh, how much money we allocated, and then government uses that report to plan for the future. Currently, government has funded, based on government reports, I think 107 one district, one factory projects under the public-private partnership arrangement deal. What it means is that government has assisted them and provided them with somewhat funding at lower interest rates so that they can operate their business. So from government records, they said they have funded 107 factories. And so that means that allegedly there should be more jobs, isn't it? I mean, it should create more jobs, but that is where, again, there is a problem about data, because you hear the finance minister saying the job that has been created, but the Ministry of Trade and Industry will say something else. The president will mount a pulpit and say another thing else. So again, you don't know who is saying the truth, but that's the objective of accounting, government accounting. It helps government to plan for the future. 4, to provide a process of controlling the use of the financial and other resources. How do you control when you don't keep records? So what happens is that at the end of the year, that is where budget variance analysis comes in. And we'll look at this later on. Like I told you earlier, we'll compare what we wanted to do, the budget, with what we actually did, the actual. The issue is that we will have what we call the original budget. Then we'll have what we call the revised budget. The reason why we have a revised budget is always because of the mid-year budget review. Don't worry, I'll expand on this later on. I just want to use it to explain the point so you understand what's going on. Then we're going to have the actual coming in. Then we'll have the variance coming in. So the original budget is what was approved before the year end, and the e-levy thing came and they started fighting in parliament and beating people in parliament. And then those things happen, and all of a sudden they pass the e-levy. That is the original budget. When we get to before 31st July, Minister of Finance will go to Parliament to report on the implementation of the 2022 budget. There could be revision of the budget. And so at the end of the year, we will not be using the originally approved budget. We will instead use what? The revised budget. So we will compare the revised budget to the actual results that was obtained, and we'll get a variance to see, did government earn more revenue than it budgeted for? Did government spend more than it budgeted for? That helps us to what? Control government resources and to ensure that the resources are not being used for purposes that are not intended. That is another reason why we need to keep government accounts at the end of the day. And that ties to the 5th point, to provide how actual performance may be compared with the target, and to evaluate the concept of value for money, period. To evaluate value for money. So these are what we mean by the objectives of government accounting. Okay, the reason we want to prepare financial statement, the reason why we want to keep records using the gift miss, the reason why we are doing budgeting, the reason why we are doing variance analysis, the reason why we do budget variance analysis, the reason why we do all of those things is to fulfill the legal requirements, to perform the stewardship function, to plan for the future, to control the resources of government, and most importantly, to be able to evaluate value for money, to ensure that resources are obtained at the least cost, they are used for their intended purposes, and we are getting the best possible outcome, and that resources are distributed equitably among the intended beneficiaries. These are the objectives of government accounting. Any questions, please? Okay. Then let's look at the second side of the coin. And that is going to be the objectives of public sector entities. Why do public sector entities exist? Okay, so Ministry of Health. Why the heck do they exist? Ministry of Gender and Social Welfare. Why do they exist? Ministry of do we have anything like that? Ministry of Employment, I don't know. But Ministry of Trade and Industry, the local assembly, Accra Metropolitan Assembly, whatever municipal assembly. Why the heck do they exist? Their objectives. Their objectives. That is what we want to look out for now. And that is here on page 7, objectives of public sector entities. Objectives of public sector entities. So the public sector entities exist for a number of things. One, to provide goods and services to all citizens. Most importantly, regardless of the ability to pay. It is what it is. It is what it is. Regardless of the ability to pay. Regardless. So irrespective of the ability to pay, we provide them with goods and services. That is why free SHS is there. I mean, people must go to school, isn't it? If they don't have money to pay for the school, give them the education, isn't it? That's free SHS. That's free SHS. Okay, so that's the first thing. They exist to provide goods and services to people irrespective of the ability to pay. Then, and that is also the reason why National Health Insurance scheme is also there. Okay, so that people get health, whatever. Just that, I mean, it doesn't work on all categories. And allegedly, sometimes when you take the National Health Insurance to certain hospitals, they look at you and they are like, okay, be there, we will come. Then somebody with cash will be served ahead of you, because if they serve people, they take the records to the government. Government is not paying the money, because the money now, some is not available. So that is it. But I mean, it is what it is, regardless of people's ability to pay. 2, to provide goods and services, public goods and services, such can only be economically provided by a centrally planned organization. In other words, you see, there are certain services, you can't put money on it. If you put money on it, then people are screwed, like protection against external aggression. Imagine we privatizing the Ghana Police Service, the Ghana Army, the Ghana Navy. Imagine it's being a private entity. Yeah, like it's serious. It's going to be serious. Even though it is currently funded, Ghana National Fire Service, even though Ghana National Ambulance Services, all these institutions are supposed to be provided by government. But allegedly, if you call Ghana National Ambulance Services, they will tell you they don't have fuel. You're supposed to fund their fuel. You go to the police station to report a case. Allegedly, you're supposed to pay something before they go after you to go and pick the person, because they will tell you, if I'm going, you're going to fill our tank for us, or you're going to give us something. But you are not supposed to pay for some of these things. They are supposed to be funded by government. But generally, these services should be provided by the government. Hence, they are provided by the government. Then justice and equity, we cannot really put money on that. National security, we cannot really put money on that. So some of these things, if we're left with a private individual, then nobody will have security in this country, in many countries, but government provides that equitably to people, and that is why public sector entities exist. So Ghana Police Service, you can be protected. Ambulance Service, you can be protected. National Fire Service, you can be protected. Just pray that they won't bring fire extinguisher to come and quench a building that is on fire. But that is it. 3, to create and maintain economic and social infrastructure within the country and to provide a benefit to everyone within socially acceptable norm. That is another objective for public sector entities. Provide us with infrastructure facilities, road, hospitals, whatever the heck. I mean, everything else. Provide us so that we can socially live at the end of the day, to correct inequalities that may exist among different groups within the country. This one is just a point. It's called academic point, but in reality, it's not true. But it's an academic point. To correct inequalities that may exist among different groups within the country. What does that mean? It means that if somebody is in a developed city, or somebody is in a city and the person get access to quality water, the person get access to electricity, the person get access to education, the person get access to security, somebody in the village should also get access to what? A quality water, electricity, quality education, and quality security. That is what we mean by what? Correcting inequalities. But you know that it is not like that. I mean, it is not like that every time, but it is what it is. Then the last thing is to ensure a consistent approach to certain practices or procedures and to promote certain minimum standards in the handling of critical national issues. So what are the objectives of public sector entities? Providing goods and services irrespective of people's ability to pay, providing goods and services that can only be provided by government because of the fact that you cannot charge anybody for that, providing infrastructure facilities to people, for correcting inequalities among different classes, the middle class, the upper class, and then the lower class. And then number 5, most importantly, being able to be consistent in the approach on practices. These are the objectives of public sector entities. And this is why we are doing what we are doing. Any questions, please? Any questions? Okay. So we've said government is established entities authorized to run the affairs of the country. We've shared our thoughts on what government accounting is. We've looked at the differences between government accounting and private sector accounting. We've shared our thoughts on the concept of value for money. We've looked at the objective of public sector accounting and the objectives of public sector entities. Now, the question we then ask ourselves is, how do we do this generally? Yeah, we said government must show its stewardship. Government must fulfill the legal regulatory requirements. But how does government do that? Government shows its stewardship, like we said, from the preparation of financial statements. So let's look at the qualitative characteristics of financial statements. Qualitative characteristics of financial statements. Now, so according to IPSAS 1, public sector or government, government is required to prepare certain financial statements. Government is required to prepare certain financial statements. And so we must know the types of financial statement that government is required to prepare, number 1. And then number 2, we must look at the characteristics that these financial statements should have in order to make them useful to the users of the financial statements. And you can see this directly in your book when we come to the issue relating to general purpose financial statement. And that is from page 12. So that is where I'm taking my thing from. So in the public sector, what are the set of financial statements that government is supposed to prepare? Yes, we've said that government must show its accountability through the preparation of the financial statement. So what are the sets of financial statements that government prepare? And according to IPSAS 1 and then the conceptual framework for general purpose financial statements, the government must prepare the following sets of accounts. 1, the statement of financial performance. The statement of financial performance. Sometimes this also is referred to as the statement of revenue and expenditure. The statement of revenue and expenditure. Now, this assesses the financial performance of the organization or the government for the year under review. In other words, how much revenue came in and how much did we spend? How much revenue came in and how much did we spend? That is the statement of financial performance. That is a statement of financial performance. Then we come to the statement of financial position. We come to the statement of financial position. Now, the statement of financial position is also another statement that shows the financial assets of government, the non-financial assets, and then liabilities. Now, we're going to get into some of these guys a little bit later in our discussion. But when we talk about financial assets, we are talking about issues such as equity investments, okay, that government has, okay, equity investments, it's a financial assets. Issues about bonds that government has, it's a financial asset. We can even put trade receivable situation. It's a financial asset also there. So all these guys are financial assets. Are you getting it? Then non-financial assets will be issues relating to infrastructure, property, plants, and equipment. Okay, infrastructure, property, plants, and equipment. So we are talking about road, building, vehicle, motor vehicle, work in progress. All these are non-financial assets. We'll get into these later on when we are preparing the financial statement. But on the statement of financial position, we see the financial assets, we see non-financial assets. Then certainly, we're going to also see liabilities, and we'll get into this in a moment for you to see. So the statement of financial performance is there. The statement of financial position is there. Then we come to the statement of receipts and payments. This is like the cash book in the public sector. So this records the cash receipts of the entity and then the cash payments for the entity, both cash and bank, usually at the end of the day. And that is a statement of receipts and payments. Then we have the statement of changes in net assets and equity as well that we need to prepare. Then we come to the cash flow statement. Now, the cash flow statement looks at the cash flow statement is different from the statement of receipt and payments, because the cash flow statement generally looks at the cash and cash equivalents that are coming in and cash and cash equivalent that we pay during the year. The objective is that it helps government to identify the various sources of revenue, as well as the key items that expenditure was spent on. And we'll look at this later on in our discussion, cash flow statement, when we are preparing the financial statements, and we'll discuss it later on. Then we have what we call statement of actual and budgeted results. This can sometimes be called the statement of budget performance. This can sometimes be called the statement of budget performance. This was what I was illustrating to you here. Here, this is the statement of budget performance, where we bring in the original budget, then we look at the revised budget, then we'll compare the revised budget to the actual so that we can get a variance. This one here is the statement of budget performance. We'll look at it later on, so don't worry. We'll look at it. So it is to assess whether the entity is meeting its what? Budget objectives or not. So we'll compare the actual performance to the approved or the revised budget of the government. That is also another statement that we prepare. Then certainly the notes to the financial statements. I mean, every financial statement we prepare must have some notes generally at the end of the day. So the notes to the financial statement will also be something that we will look out for at the end of the day when it comes to dealing with the financial statement. And in the notes, various disclosures would have to be done in the notes to the financial statements. And I may not say this anywhere again. There are some things I may not talk about them again, like the concept of value for money that I explained. I'm not going to talk about it again anywhere. Then what I'm about to discuss also, I may not talk about it anywhere again, but make sure that you hold it very well, because the examiner has asked that before and he can ask you again when it comes to the preparation of financial statements. So when it comes to the notes to the financial statement, various things must be disclosed in the notes to the financial statements. The following are some of the things that must be disclosed in the notes to the financial statements. Number one, we have to disclose to the notes in the notes to the financial statements the accounting concepts used and assumptions used in the preparation of the financial statements. We would have to also disclose issues in relation to the laws or regulations used in the preparation of the financial statements. We would have to also state the issue in relation to the IPSAS. We have to make reference to the IPSAS in the notes to the financial statement, that the financial statement was prepared in accordance with what? The IPSAS. So the IPSAS reference must be disclosed in the notes. We have to also disclose the notes on the way non-financial assets were accounted for in the notes to the financial statement. So how were the non-financial assets accounted for? So their recognition, okay, their subsequent measurements. How did we account for all these? It has to be stated there in that case. Next one, the financial assets. How were they recognized? How were they subsequently measured? We have to disclose that. So if during the year government bought some shares, how did they treat it? If during the year government sold some shares, how did they treat it? Is that there was a state enterprise and government sells it during the year? How much did they sell it for? Who did they sell it to? All those must be disclosed in the notes to their financial statements. That is crucial. That is basic. We must disclose it in the notes to the financial statements. So the accounting concept must be disclosed. The laws and regulations. Here we are talking about the PFA, the PFM Act, the Public Financial Management Act. Definitely here, and the Public Financial Regulations 2019. Also there. These are the laws and then directives from the Controller, Accountant General, the Auditor General, and the Minister of Finance. All those things will be disclosed there. Then definitely the workings will be part of your disclosure. The workings you will do for tax revenue, non-tax revenue, personnel emolument, depreciation, or what we call capital consumption, all those workings will be part of your disclosure requirement. So in the notes to the financial statements, these are the number of things that we will disclose in the notes to the financial statement. So when we talk about the financial statements that are prepared in the public sector, these are the things that you need to understand. So the examiner can bring any of these guys. So performance and position can come together. Cash flow can be independent on its own. Then the statement of budget performance can also be independent on its own. Any of these guys can be asked by the examiner. Any of them. Any of them. So you have to know how to deal with each of them at the end of the day. And we're going to be going through them actually as well as we continue with our discussion. So these are the sets of financial statements and their objective for the entity. Any questions, please? Any questions? Okay. Then the next question we ask ourselves is, what are the elements in these financial statements? So there are a couple of elements in financial statements. I mean, you know these things already. Sorry, you should know these things. Not that you know, but you should know. I mean, you're expected to know. You did it in KG2, and then you did it in level 100 or whatever the heck you did. Assets, liability, accumulated fund, revenue / income, and then expenses. Yes, I need one-liner definition, fast, and let me go away. At your level, I'm not supposed to be defining what an asset is. I'm supposed to just jump over it and then go away. Yeah, that's it. I jump and then I go away. Yes, who is lying? Yeah. Somebody should take something for me. Assets, liability, accumulated fund, revenue or income, expenses. Yes, Oxbet. Since you have unmuted, bring your head.
So assets are resources that government control as a result of past events.
So person dey count. Someone say refi.
No, I want to contextualize it in terms of public sector.
Public sector, yo, Mate.
From which
Okay.
economic benefit will flow into the public purse.
Okay. All right. So assets are resources controlled by an entity. Okay. Keyword here is controlled. Okay. Keyword here is controlled. So resources controlled by an entity. Now, the reason why the keyword here is control is that assets are not things you own. They are things you control. So the control here can come in two forms. Either we directly bought it, okay, or we leased it, okay, on a finance lease. So if we have it as a finance lease or we directly bought it, then we control it, okay? So resources controlled by an entity from which future economic benefit or what we call service potential flows to the entity. Future economic benefits or service potential flow to the entity. Future economic benefit or service potential flow to the entity. Now, you know, there are some assets that directly generate money. So for instance, let's say that, let me give an example. Let's say the Ministry of Health, okay, acquires a building. Stay with me carefully. And the building they acquire, they are renting it out or they are leasing part of their building. That means that building becomes, it's an asset. They are controlling the assets, but then they are getting what? Economic benefits, which is the annual rentals they get. But if the Ministry of Health is not leasing or renting out the building to someone else, but they are using the building in their day-to-day running, then that will be referred to as what? Service potential. Are you getting the idea? So there are certain assets that money will come from the asset directly. Whilst there are certain assets also, you don't get direct money from it, but you use the asset in your day-to-day running. So the asset now becomes what? Is service potential. So if the Ministry of Health is using the asset, then they can what? Recognize it in their books at the end of the day. Now, if they own the assets, but it is used by another government agency, then certainly they cannot recognize it in their books. That agency instead must recognize it in its books. So that is what we mean by assets. Resources controlled by an entity as a result of past events from which future economic benefits or service potential flows to the entity. From which future economic benefit or service potential flows to the entity. Yes, who else? Giving me something else. Liability. Who's giving me something else? Yes. Oh, come on, man. You did these things in KG2 now. Abdullah. Adelaide. Anita. Bernard. Gladys. Michael. How many Michaels do I even have in my class? Yes. Yeah.
So since that, I will move on. So liabilities are present obligations as a result of past events. The settlement of which result into an outflow of the.
Okay. Oh, your network is catching up with you. Sorry.
So should I go over?
Yeah, go over. Let me see.
Yeah, so I was saying that liabilities are present obligations an entity is liable or is supposed to meet as a result of past events. The
Okay.
settlement of which will result into an outflow of the economic resource of the entity.
Okay. Okay. So liability is a present obligation. You are owing now. Okay. A present obligation as a result of what? Past events. A present obligation as a result of past events. There is a distinction between liability and provision. Okay. Not Gary and Milo. Provision is a liability of uncertain amount and timing. So with provisions, you owe, but you don't know how much or when you're going to pay it. So that is provisions. But liability, you owe, and you know how much you owe. So it's a present obligation. And because of it, the settlement will result into an outflow of future economic benefits embodying the entity. Now, in the public sector, we don't have equity. What we have is accumulated fund. Okay, so the accumulated fund is the same as equity in the public sector. In other words, that is the excess of assets over liability. Okay, so when we take our assets and subtract all our liabilities, that is the accumulated fund generally. And we're going to share our thoughts on that later on when we are preparing the financial statements. Then we have income and revenue. Now, these are used interchangeably, but sometimes we have a thin line coming in between them at the end of the day. What do we mean by that? Revenue is the inflow of economic benefits from the core activities of the entity. Okay, the inflow of economic benefits from the core activities or core operations of the entity. Whilst the income is from non-core activities or operations of the entity. Okay, so rev is from the core activities, income is from the non-core activity. So let me explain that to you generally. So let's say that we take what? DVLA. Let's take DVLA. Now, DVLA, their revenue will be when people come to license their vehicles or register their vehicle, take their driving license and all of those things, re-register, and all that, that will be the revenue of DVLA. But if DVLA has an asset and they sell that asset, make some money, that is not revenue to them. That will be referred to as what? Income. Or if DVLA invests some surplus cash into some investment, some fixed deposits they have somewhere, and they earn some interest, or they buy some shares in MTN or in another listed company, then the returns they get from that is not revenue. It will be referred to as what? Income. So that's the distinction between the two, even though sometimes they are used interchangeably. Revenue usually comes from your core activities. Your main object of operations will be your revenue. Then your income will be from the non-core operation. I hope that makes sense. So they are all inflows of economic benefits, only that revenue are from core activities, income are from non-core activities, Then we go to expenses. Expenses are simply increase in outflow of economic benefits. Now, expenses can be the cost of operation is an expenses, okay? Or increase in liabilities could be also an expenses. So for instance, let's say that, we know that maybe government has bought, not that maybe, government has borrowed money, and usually a lot of the money that government borrows, especially on the euro market, is denominated in the dollar. Okay, so at a given point, government thinks that it owes maybe whatever, let's say $10 million. Let's make it B, because $10 billion. Now, if we translate that into the Ghana cedis, maybe at the time of issuing of the loan, probably the Ghana cedi was whatever, 7.2 to $1. All right. But then at the end of the year, if government is preparing financial statements, they would have to translate using the closing interest rate, so using the closing exchange rate. I will explain this to you also under the IPSAS. But when they translate, the Ghana cedi has further depreciated. So maybe at the end of the year, by the time they are preparing their accounts, the Ghana cedi is now maybe 7.925 to $1. So you realize that right now, if you compare the time of issuing of the bond, the exchange rates that we were having, 7.2, to the year-end preparation of the financial statement, you realize that the liability has gone up. That excess increase in the liability is going to be expense in the books of the financial statements. So that is also an expenses. Or let's say someone owes the government. So someone is having some outstanding taxes, and the person owes the government. The person is supposed to pay the government. Then the person declares and files for bankruptcy, and the person's assets or business is liquidated, but the assets were sold and they were not able to generate any substantial money. It means bad debt. So government has to write off those debts as bad. So bad debts becomes also what? Expenses as well for the government at the end of the day. So when we talk about elements of the financial statements, these are the elements of the financial statements. We're going to be expanding on these when we are dealing with revenue management and expenditure control, and most importantly, when we are preparing the financial statements: assets, liabilities, accumulated fund, revenue and income, and expenses. These are the elements of the financial statement. Any questions, please? Okay. Finally, for today, the general purpose framework gives guidelines that financial statements must be prepared in a certain manner. So the next thing we want to look at is the qualitative characteristics of financial statements. So qualitative characteristics of financial statements. Now, when we talk about the qualitative characteristics of financial statement, we simply mean the attributes that a set of financial statements must have to be useful to the users of the financial statement. Okay, so it refers to the attributes that a set of financial statements must have to be useful and enhance the decision-making process of the users. That is what we mean by qualitative characteristics of the financial statements. The attributes, the qualities, the distinctive nature that the financial statements must have in order for the users to be able to use it. In order for the users to be able to use it. That is what we mean by qualitative characteristics of financial statements. Now, the qualitative characteristics of financial statements can broadly be divided into two. We have what we call fundamental qualitative characteristics and enhancing qualitative characteristics. The fundamental qualitative characteristics and the enhancing qualitative characteristics. Now, the fundamental qualitative characteristics are the go-to. Like every financial statement that we prepare must exhibit these characteristics. And that is one, faithful representation. Faithful representation. In other words, the financial statement should be faithfully represented. faithful representation. And then number 2, relevance. Faithful representation and then relevance. But then the conceptual framework states that, hey, in addition to the financial statement being faithfully represented, we will explain what that means in a moment, and it's being relevant, there must be some other characteristics that augment, that assist, that really make it to be done generally at the end of the day. And these are characteristics such as understandability, timeliness, comparability, and then verifiability. And then verifiability. So these are the sets of qualitative characteristics that, or these are the qualitative characteristics or attributes that a set of financial statements is expected to have, that a set of financial statements is expected to have. Favor representation, relevance, understandability, timeliness, comparability, and verifiability. So the way this works is that, like I said, the fundamental are the real go-tos. Okay, like at the end of the day, they are the things that set the tone that is going to be there. However, the fact that the tone is set does not mean everything is okay. There should be some other qualitative characteristics that provides conclusive assurance to us at the end of the day. And those are what we refer to as the enhancing characteristics of financial statements. And I always use makeup by ladies at the end of the day. When a typical boss lady or corporate executive finish bathing, for instance, she's gonna apply pomade and all that, but then they will do their makeup, okay, still in their not fully dressed, but they will do their makeup. Then after they finish dressing, they are going to now tidy up and then add some other things at the end of the day. It's called enhancing qualitative characteristics. Or better still, we realize that anytime they are going in a meeting, she's in a car. When she gets to the destination for the meeting, you see that she opens her bag. That's why all the time the ladies, they have makeups in their bag. They open the bag, then they dip in a brush, then they just make sure that their face is nice. It is called enhancing the physics so that their face will look nice. When they go home and they wash it, they realize that, oh, this is the face that they were having. That is just by the way. But that is the concept of fundamental and what? Enhancing. So the fundamental sets the tone, but enhancing completes the financial statement to make it reasonable for the users of the financial statement. So let's run through these as they are already here in your book on page 14 of your book. The elements is also here on page 15 that we discussed. So let's go through them quickly. So number 1, relevance. 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 Relevance simply means that every information that is necessary, that is material, should be included in the financial statements. That is what we mean by relevance. So the relevance has to do with inclusion of the item in the financial statement, and it depends on the materiality of the item. So that if the thing is material, then it will be relevant for the users of the financial statement. For instance, as part of the disclosure requirements, okay, as part of the disclosure requirements, when the government issues bonds, okay, when government issue bonds, government is required to disclose the people who subscribed to the bond. It must be disclosed. We must know the companies we owe at the end of the day. So because that information is material. So that if it is family and friends, we can know that, oh, that was why the bond was issued at that particular interest rate, even though it's not reasonable on that particular case. So is that information relevant? Yes, it is relevant. Yes, it is relevant. So the standard or this quality is that any information that is material. Now, an information is said to be material when its omission, misstatement, when its omission or misstatement affects the decision-making of the users. So if any information that is going to change people's decision, if it is made available or not made available, is supposed to be included in the financial statement, then it must be included in the financial statement. That is the concept of what? Relevance. Both financial and non-financial information must be included in the financial statements if they are material. 2, faithful representation. What does that mean? When we say the financial statement is faithfully represented, it means that the financial statement represents the economic and other phenomenon that it purports to represent. That is faithful representation. So for instance, if government receives whatever, let's say 1 billion from IMF, and government comes and say, oh, we received 140 mil from IMF, what the heck is that? You're lying to us. Again, that is relevance, and that is against faithful representation, because government is not disclosing all material information at the end of the day. So what does that mean? It means faithful representation has 3 things, 3 components. Number 1, that the information is complete, meaning all the transactions that occurred during the year has been recorded. 2, that it means that the information is neutral. In other words, it is free from bias. Nothing was affected. Nobody's judgment was implicated whilst preparing the financial statement. It means the information is free from bias. So it is neutral. But the third thing about faithful representation is that the information must be free from material errors. Yeah, we are not saying fraud. We are just saying material errors. Okay, so like I said, if IMF gives you 1 billion and you come and say that IMF didn't give you 1 billion, they give you 140, is that an error or you're chopping the money? We don't know though, but now one of the funds that is under judgment is the COVID fund. I mean, we've heard the ex-president challenging the current president that he should cause an independent scrutiny of the fund if they have not chopped the money. I mean, now Ghana is broke, so I mean, the money was used for the purpose that intended to be used. We don't know though, but it is what it is. So that is what we mean by faithful representation. The information is complete, it is neutral, and there are no material errors. So if government reports, government financial statements are not inconsistent with what the international organization is saying, what IMF is saying, that means the financial statements are not faithfully represented, period. But you see, the financial statement should be prepared in such a manner that every individual should be able to understand it. That is understandability. Okay, it should be prepared in such a manner that it could easily be comprehended by everybody. That is why, on the average, everybody must know that the government's expenditures are classified into public interest. Okay, are classified into public interest. Give me a moment, my slide is messing me up. Are classified into public interest, personnel emolument, goods and services, social benefit. Okay, these are the key capital expenditure of government. Actually, these 3 guys alone will consume all the government's revenue that they have projected for 2022. Public debt interest, personnel emolument, goods and services. It will consume the projected revenue of government. And now that the e-levy has been budgeted down to 4.5 billion Ghana cedis, you can imagine government will not be able to meet those expectations. But that is what we are saying here, that it should be simply and in a manner that will be understood. But timeliness is very critical. Financial statement that is provided in a later date is not meaningful When it's provided before the time required, it's also not meaningful. So for accountability purposes, the financial statement must be provided at the time that it is needed. This is one of the problems of Ghana. Sometimes you are in 2020, then the Public Accounts Committee is now reviewing the accounts in 2016, in 2017. That is difficult because it is not helping to really hold people accountable. So to enhance good public accountability and prompt decision-making, financial statements and reports must be produced on a timely basis. 5, financial statement must be prepared in a manner that they should be what? Comparable to previous years. Because comparability is very critical, meaning that we can compare the financial statements of 2020 to that of 2021. That is comparability. But in order for us to be able to compare financial statements of one year to another, government must be consistent. So there should be consistency in the application of accounting concepts. So if last year government uses a certain accounting concept and this year government is using a different accounting concept, then we can achieve what? Comparability of financial statements. So what we are saying here is that when preparing financial statements, we have to ensure that we can compare one set of financial statements to another set of financial statements. That can only be possible if there is a consistency in the application of accounting principles and policies in the preparation of the financial statements. But the last thing is that the financial statement should be verifiable. It simply means that the financial statement must be prepared in such a way that it can be verified from other sources. Now, that can be done through the audits of the financial statement, and also that can be done from the international organization. That is why when the government came and said, oh, IMF gave us $140 million and something allegedly, IMF came and said, hey, listen, stop lying. We gave you 1 billion, and later on we added another 140 billion. Why are you not reporting the whole thing? It means we are not able to verify the financial statement government is preparing because, I mean, the money has been chopped allegedly. These are the qualitative characteristics of financial statement. Any questions? I'm going to be concluding around here today. And God willing, next week, we will jump on to the rest of our question. So next week, we are continuing from here. So we'll look at the accounting basis. We will look at the rules. Then we'll look at these guys. And from there, we will jump straight up into public-private partnership arrangements. Okay? Public-private partnership arrangement. So you can read ahead of me before we come next week. That way, you will be able to bring some questions up or share some thoughts as we move ahead in our discussion. Any questions for me, please? Any questions? Okay. So that is it about that. I'm seeing some chats coming in on YouTube. Let me see if I can say it. What? Deborah Boatin said, hi, sir. I'm a level 100 student in KNUST reading BSc Administration, Accounting, Banking and Finance. I wanted to ask if it is advisable for me to start writing the ICAG in level 1. Yeah, why not? You can start so that by the time you graduate with ICA and your first degree. That would be cool. That would be cool. So if you have the capacity available, why not? Go for it, Deborah. I will really encourage you to do it so that by the time you graduate, you have also chartered as an accountant, and it shortens the journey and it makes you to become get more opportunities as quickly as possible. Odinakachi said, good evening, Shiraya. Good evening. Can you say that faithful representation shows substance over form? Yes, that is it. That is one of the ways we can look at faithful representation, where we look at the substance of the transaction over the legal form. So for instance, when you lease an asset and the lease is a finance lease, the asset is not yours, because when we go to court, the asset is not in your name. So you don't own the asset. But because you control the assets, you are the one who maintains the assets, you are the one who is going to depreciate the asset. You are going to be accounting for it and recognizing it in your book. So yes, we can say the faithful representation concept is also about looking at the substance of the transactions over its legal form. Okay, so I think that is it about that. So that's all about it. Next week, we will continue with the rest of our questions, the how and the who. Then we'll go to public-private partnership arrangement. And we're going to see how far we're going to go after next week. So that's it about that. Enjoy the rest of your holidays, and I'll catch you next week. Bye-bye.
All right, thank you.